Welcome to the Roy Morgan Weekly Update. The federal parliament met for the first time last week, and the new Albanese government has hit the ground running over the weekend with the proposal to enshrine an Indigenous voice to Parliament in the Australian Constitution. The details of the proposal are yet to be explained to the electorate, but the issue is likely to be taken to a referendum sometime next year. And we at Roy Morgan will be keeping a close eye on public sentiment towards the idea. The last time Australians voted on a proposal like this, marriage equality, in 2017, Roy Morgan surveys predicted 61.5% of Australians would vote in favour of the proposal. The final result showed 61.6% of Australians voted in favour. Pretty close. We'll be surveying Australians' attitudes to the Voice to Parliament referendum later this year. Turning now then to the key weekly indicators. The latest Roy Morgan poll shows ALP support has dropped after the first week of the new parliament. The ALP is down 2 percentage points to 54%, but retains a large lead over the coalition on 46%, up 2 percentage points. On a two-party preferred basis, obviously. The Roy Morgan government confidence rating is down for a fourth straight week by 2 points to 101. Now it's only marginally in positive territory, just above that neutral level of 100, where equal numbers of people are sort of positive or optimistic or negative. The result is based on 41% of Australians saying the country is going in the right direction, that's down 1 percentage point, and 40%, up 1 point, who say it's going in the wrong direction. But in better news for the government, there was another slight improvement to the latest ANZ Roy Morgan Consumer Confidence Rating. So consumer confidence is up by 1.7 points to 84.1, still well below that neutral 100, where equal numbers are positive and equal numbers are negative. Inflation expectations, or what we might call the wisdom of crowds. The Roy Morgan Weekly Inflation Expectations Indicator has averaged nearly 6% over the last 3 months. So Australians expected an average of 6% inflation. So it was no surprise to the Roy Morgan team that last week's ABS inflation number for the June quarter came in at a 20-year high of 6.1%, pretty much as Australians expected. The high inflation represents the key pressure for the Reserve Bank to raise interest rates today for the 4th month in a row. However, there are signs that inflation pressures are slowing. The key indicator to watch at the moment is the weekly inflation expectations of Australians. This last week, Australians' inflation expectations dropped by 0.5% to 5.5%. And they're now at their lowest for over 2 months since late May this year. Another important indicator showing Reserve Bank interest rate increases are having an impact is the monthly retail sales data. The latest ABS figures for June were released last week, showing sales were up by 12 percentage points on a year ago to a record high of $34.2 billion, a new record high. However, if we look at this month on month, the increases in retail sales have slowed noticeably since hitting a high in February this year of 1.8% month on month. This dropped to 0.9% in April, 0.7% in May after the first small interest rate increase, and was only 0.2% in the latest figure for June after the second, even larger interest rate increase. These indicators suggest spending growth is slowing after only a few interest rate increases. So the Reserve Bank is doing its job. One of the key drivers of inflation pressures is the price of energy, and this is most evident to Australians in the price of petrol. The good news for Australian consumers is that the average price of petrol in Australia has dropped by over 30 cents per litre over the last 3 weeks to be at $1.82 last week. And with so much discussion now about the fuel excise tax, it's interesting to analyse the difference between the wholesale petrol price and the retail price. Today, the difference between the wholesale petrol price at $1.59 and the retail price at $1.82 remains large at over 20 cents per litre. That was last week. Before the war in Ukraine, this margin was not 20 cents, it was around 10 to 12 cents per litre. The difference in price has now been above 20 cents per litre for 3 straight weeks, indicating that petrol retailers are charging a much higher price than they should be. Perhaps something the ACCC should be looking into. If margins were at pre-war levels, that's pre the Ukraine war, now the average retail price of petrol would be under $1.70 per litre. And as we've seen consistently, when petrol prices drop, consumer confidence soon begins to increase, and the measure has now increased for 3 straight weeks, although it's still well below the neutral level of 100 at only 84.1. Let's look now at the business community. The latest Roy Morgan Business Confidence for the month of July is being released today, and I can reveal business confidence has dropped, down 2.4 points to 94.9. Business confidence is now at its lowest since September 2020, when Victoria was in a long second lockdown. That said, the business community continues to be far more confident than the average consumer by about 10 points. A look at the key questions within the index shows that although businesses are concerned about the state of the Australian economy over the next year, they remain broadly positive about their own business. And in positive news, 41.4% of businesses say they expect their business will be better off this time next year, and only 28% say their business will be worse off, a net positive result of 13.4 percentage points. And that's a wrap for this week. Subscribe to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thank you for listening, and I look forward to joining you next week when we'll have the latest data on consumer confidence, inflation expectations and voting intentions. Take care. See you next week.